Welcome to another edition of Your Daily Five. I'm your co-host, John Colucci. Johnny Scan with me today, Professor Bruce Frazier. Professor, how are you?
I'm terrific. Thank you, John. Good to be here.
We have a very interesting scan today, and we call this Three Sigmania Extreme Bollinger Band Events. Such a wonderful, wonderful indicator that was developed by John Bollinger. And let's take a very quick look at what that is. It's a center moving average. 20 period SMA is the typical setting. And we have the bands denoting measures of deviation, standard deviation from the center line. And in this particular case, the standard setting is 20 period SMA for the center moving average, 2 standard deviations the band width. And note how the bands expand and contract. Those have deep meaning, especially for Wyckofians, but we're going to take a look at what happens when price reaches an extreme, and we're going to push the envelope on extreme by moving out to 3 standard deviations. What do you think about that, Professor?
You're becoming extreme about the extremes.
Extremely. Absolutely.
I can't wait.
So let's take a look what we can do here. So our universe is going to be the stocks in these various indices, and we're going to ask the engine to give us a setup where there's a minimum 3-period low. So the low in the last 3 periods is lower than the lower Bollinger Band, using the 20-period SMA as the center line, but 3 standard deviations is the width of the bands. We're going to ask that this be sorted by the proximity to the lower band. So how close is the close to the lower Bollinger Band using that 3 standard deviations? Ascending sort is going to give us the smallest ones first. Let's see what happens when we run this scan. Out of all those over 1,000 stocks, we have 30 stocks that returned an extreme move of 3 standard deviations, which some people would call a 3 sigma move. Those are significant moves in the marketplace. Your thoughts, Professor?
Yeah, that's a substantial jump in volatility for any stock. Be very interesting to see the results we get here.
So here we have our list, and here is our relationship to the lower Bollinger Band. So our close related to the band, this is 9% under the lower band, and as we go down, we have some that are actually above the lower band. That would be a snapback situation. Often we can look for extreme events that then revert to the mean. The mean in this case you could assign as the 20-period moving average in the center of the band. So let's take a look at what we have. Emergent Biosolutions, first stock up. Downtrend all the way. Let's talk a little bit about our chart setup. We have the standard 2 standard deviations here in the blue line for the Bollinger Band, and then the pink dotted line is the 3 standard deviations. So you can see how the width of the band is affected by the setting for the standard deviations. But here we have downtrending OBV, downtrending SMA in the middle, Bollinger Bands. Notice how the bands have constricted and then big move on huge volume, poor relative strength. A lot going wrong here. What are your thoughts, Professor?
Well, very typical is to see a pause or redistribution in this case that produces diminishing volatility or constriction of the bands. And then right when the instrument is ready to start moving again, the bands widen out as the move starts. And we're seeing that over and over and over in this chart. Very interesting.
Look at the snapback rally there. We have 13% up today, and that was a huge move down yesterday. Didn't recover all of its move yesterday, but big move with the market today. So maybe it is trying to revert back to the mean there. Here is Vericel Corp, biotech. Here we have a very close to a bullish engulfing bar after a tremendous move down on volume yesterday. Look at how this has been a horizontal structure for a long period of time and very much of a potential shakeout action. What does a shakeout mean to the Wyckoffean, Professor?
Well, a shakeout is often, or a deep spring, a shakeout would be a supremely deep spring, is that they often don't resolve themselves by reversing. They will shake out an important support area and consolidate potentially down there and then just keep going, or they just keep going, and depending on the reason why they broke down. And so this is a very important existential moment in the stock when this kind of an event happens.
Huge move down, 3 sigma event accompanied by a snapback, moving us beyond yesterday's open, although the true range of that bar is significantly greater. So it did recover over half of yesterday's move, still a major move. Remember, we're looking at the worst of the worst first, but that does not mean there aren't important things to learn from both ends of the list. Wolverine Worldwide, shoe manufacturer based in Michigan, Rockford, Michigan. 1880s. This company was founded in the 1880s. Can you believe it? Well, somebody must not be buying shoes, because look at that move yesterday, and not much of a move back up today. In fact, a black candle indicating that our current value is lower than our open, although higher than yesterday's close. Your thoughts here, Professor?
Well, the extreme volume may come on potentially like earnings news or some other important news on the company, but look at the very high volume, which suggests that this is news related. And also a stock that has a pretty good dividend, here in this case 3.36%, will often produce value buyers that will tend to want to buy stock at low prices. That's not typically a Wyckoffean strategy, but it's not uncommon to see that. As you saw back in mid-May, you see a big decline, very high volume, not nearly as high as now, but that produced an important low and a reversal up for about a month. And so these events can be stopping action because they're climactic, but very treacherous to trade.
Yes, indeed. Our next candidate, Viasat. So here's a dramatic move down, but not to a significant new low. Very much more of the traditional spring type action. We have on-balance volume moving up, degraded slightly with this big move, but relative strength has been performing reasonably well prior to this latest down move. So this could be more constructive in nature, and perhaps it is giving us a spring profile, which is a very important Wyckoffean concept. Your thoughts here, Professor?
Just that the very important point you made about it not being a new low, and that it went down and tested the late September end of the quarter low, and this time we're in the middle of the quarter. It's gone back to that level, and also you can see an important low right as the third quarter began in mid-July. And so here it'll be very interesting. Oftentimes when you get an important event like this, it's so extreme, you'll get some kind of a bounce and a test. We always look for the action, which is the big decline, this 3 sigma event in this case, and then we look for a test of that level, and we study the characteristics of the test. So that's what I'd like to see next in Viasat before I'm really convinced that there's any kind of a potential here.
Absolutely, I agree 100%. Here we have one from the other end of the list. So when we did our ascending sort, we got the worst of the worst first, but this is Heska Corp from the pharma area, negative earnings, but look at the bounce back from what is a very constructive bar on the very high volume drop. Remember, we're scanning for the lows, not the close. Look at the long tail on super high volume there that did produce a new structural low, but the snapback has gone above and beyond the original bar that was the 3 sigma event. Strong move up, gap up, and moving towards the high of the day on today's bar. Your thoughts here, Professor?
Yeah, interesting stock, super high volume, not a big break in the tail, as you pointed out. Also, this rally, just with a couple of days, is as good a rally. It's the best rally we've seen since early September. And that having the next thing I would want to see in the structure would be some kind of a local sign of strength, say above that 76.75 third week of October, 77 plus in early October. See some kind of a rally above those levels before it attempts to pull back and then maybe has a higher test. So those would be characteristics I would want to see to demonstrate that there's a change of character taking place here that may suggest a bigger rally.
Exactly, and keep in mind how you sort the list directly impacts what you see first. So think about what you're looking for. So if you're looking for a 3 sigma event that perhaps is the introduction to a lower low and breakdown or markdown situation, look at the worst first. On the other hand, if you want to find constructive events in the nature of springs or white coffee and shakeouts, go to the strongest first. And note here, our 3 sigma event was a couple of days ago. It wasn't yesterday, it was the day before. So we've had a chance really to see what happens as a consequence of that 3 standard deviation event. So many important things to keep in mind when you're sorting your scan results. They can make all the difference in what you see first. Professor, thanks so much for joining me.
Thank you.
Take a look at our friends over at Wyckoff Analytics. Great content there. Always available to you. A lot of free material. That's it for another Daily 5. I'm your host, John Colucci. Johnny Scan with me today, Professor Bruce Frazier. Thanks so much for joining me, Professor.
Thank you. Great scan. Take care, everyone.
Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.